Hello, this is Patrick White from AA Commodities and Investments of Spencer, Iowa, with your Sunday night, September 22nd market recap video. As you can see here, December corn is up 3/4 cent at 371.5. November soybeans are up a penny at 883 3/4, and Dees wheat is down 3/4 cent at 483.5. Kind of a little bit of a non-event here on the opening to start the week here. I'm just going to go ahead and get it started with a disclaimer. Just remember that everything I'm talking about is just my opinion and that there's no direct trade recommendations, anything like that. If you'd like to read the full disclaimer, please pause the video now. All right, so as you guys can see here, we had a little bit of a firmer opening here, with corn and soybeans, and wheat's just down, just a little bit over the weekend. We had some pretty decent coverage of rainfall. There was about 1 to 2 inches, doesn't show it here, but 1 to 2 inches of rainfall for eastern Iowa and call it the top half of Illinois towards the western area of Illinois, about 1 to 2 inches of rainfall there. So those are kind of the driest areas in the Midwest, and they're in a moderate drought to being abnormally dry, so that's relatively supportive. As far as going forward here, the 6 to 10 day outlook still has a lot of heat for most of the Midwest, really expressed in the eastern Corn Belt there, and a little bit of dryness coming in for the eastern Corn Belt, but the western Corn Belt still expected to stay relatively wet here going into October 2nd. And the 8 to 14 day shows much the same here. Just a lot of the warmer temperatures for the eastern Corn Belt and drier conditions for the eastern Corn Belt as well. But it's really been a hot September. Feels like we've got August temperatures in September, and that's really what this crop has needed so far. So it's been good for the crop, but bad for the markets. So I'm going to go ahead and get it started off with the charts in here. Going to go ahead and get it started with December corn. Had a decent sized rally here, this last week. Well, I guess these last couple of weeks, we've essentially spent the last weekend here just kind of chopping around. We haven't been able to get above this 374 to 375 level that we've been looking at. They tested that about 3 or 4 different times. If we're going to continue higher, I would expect a break of that 374, 375 region, and we'd trade on up to the 381 level. And then we'd probably, do more of the same, chop sideways. If we do break down in here, I think this 366 level, 365, 366 level is, really kind of a key level. And if you look here, this is an intraday chart. This is an hourly chart. The market went down to this 370 or 367 to 366 mark. And tested that 2 different times here on the 17th of September and the 18th of September as well, and the market held it. So there's definitely some buyers there at that level. And, if they do go away at 366, we get a close below that, could spell trouble for corn. So that's kind of the range that I'm looking at here this week, but largely just a sideways to firmer market. Soybeans, we had a nice push up here on the expectation of better soy exports. Just with the Chinese coming in on Friday, we were down pretty significantly. We were down about 10 1/4 cents. The Chinese delegates that came in, they cut their meeting with the U.S. short, and just from rumors that we heard that they weren't very happy and that they were still, the two sides were still, bitterly divided on key issues regarding technology and things like that. And with that being said, they left early, but still the talks are on for October. Even though they cut the talk short, so not a whole lot of news from over the weekend and stuff. I guess the weather forecast is still bearish, and we're just kind of in a wait and see type of mode here as far as soybeans go. We have sold them 720,000 tons of soybeans here this last week, and that's about 23 million bushels of soybeans there. So we'll see if we can get some further export sales, but certainly not what we wanted to hear there on Friday. Another thing, another little tidbit about soybeans is that Brazil's continuing to be dry, and it's really slowing down their soybean planting. They're about halfway through where they usually are at this time of the year with their soybean planting. It usually starts around September 15th, so they're about 50% of where they typically are at. And just because of the dry conditions in Mato Grosso, and that's one of their largest soybean producing provinces, they produce about 30% of the soybeans there. There's just little rain there. Between this coming Saturday and the beginning of October, they are expected to get about 1 to 2 inches, and that should help them, improve their planting conditions, and they should start to plant a lot more then, in some areas. But if they can get enough rain as well, conditions could start to improve. But that's something that we've been watching here these last couple of weeks. They're really just worried, if they're unable to get the unable to get the soybeans in on time, what does that mean for their safrinha corn crop, and what does that mean for cotton, as it usually goes in after soybeans? So, something to keep an eye on there. Going into the wheat market here, we got December Chicago wheat. Really kind of an interesting market. We've driven up pretty nicely here, and we've stalled out at about 490. These last couple of days, this is really interesting. These last couple of days, basically since September 13th, we've traded sideways in between this range between basically 480 and 491. Call it 481 to 491. And there's a lot of traders are inside of this range, whether they're long or short. I think if we get a close below this 481 level, or if they really try to run it below this 481 level, the longs up in here are really going to start to liquidate. They're really going to have some trouble. If we do, get a rally, if we get some further bullish news here, we could rally above this 490, 491 level and take a look at $5. But that's kind of the range I'm looking at. I don't really see anything, as far as right now. It's just kind of a sideways trading range environment. But if that range breaks, we could see a decent size follow through trend. So. Going into the cotton market here, kind of like the soybean market, we had that nice push up on the China news. Done nothing but to trade sideways at lower, just fill in the rally. They did go down, and they're testing the $60 mark. The low on Friday was 60.20. So the top end of this range that they broke out of is being tested. If they failed, they're probably going to head back down into this 60 to 58 range. That's where they established value here before. But if they're going to continue this uptrend, this breakout, this is kind of the time to do it here. It's kind of the do or die point for cotton. If we can hold 60, we'll probably go back up and test 62.50 to 63. If we break above that, we'll head up to 64 and a half or so, 65. Going into the hog market here, kind of like corn, had this nice push up, but just trading sideways to lower here this last week. Went down on the negative China news here on Friday and tested that $66 mark. That's where we've got support at for December hogs. If we break this $60 mark, we could probably head down into the $62 to $63 area. And just this general sideways choppy channel, that's kind of where we found our support here, before. So I think if we break this $66 mark, we're probably just headed to chop back inside this range between $66 and call it $59. And the last chart here, December live cattle, had a nice drive up here, but we're just slowing down. Not nearly as much momentum as we saw here when we got down into that $98 zone. We're kind of back into this choppy consolidation type of range that we saw here just in mid to late August. And we've seen resistance in sellers up at this 106. Make that a little bigger for you, at this 106 mark. And we've seen buyers and support come in, previously at this 103 to 104 region. So I would look for a range-bound trade between 103, 104, and 106.30 on the top side. If we can break above that, we're probably headed up to this 107.80 mark. There's a 50-period moving average there as well. A little bit of resistance from that low back in June. But yeah, I think as long as we stay in between 104, 106, we're probably going to be range-bound. If we can break out, great. If we don't, we're going to have to break this 103 mark, and we're probably headed down to test the $100 level again. So that's all I got. If you want to give me a call and talk marketing, that'd be great. 712-262-7606, or you can find us at aa-commodities.com. Send out the daily newsletter, things like that. And yeah, thanks for watching. Have a great day. Thanks.